The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth radar screen. So let's get right to it. Our first stock that we're going to take a look at is AirBnB. That's ABNB as the ticker. And you can see it's a Zacks rank number one. That's a strong buy. That's the best of the Zacks ranks. And it's got an A for growth and an F for value. That's that growth divergence that I love to see. A strong growth style score and a weak value style score tells me right away I'm on the right path, because growth investors and value investors are looking for different things. So I noticed this beat the other week, and it was a really strong one, and the guidance and everything was really good. So the stock popped up to 140. It's come back into 123. I think now is a great time to take a deeper look at this one. I love this play, AirBnB. All right, so as I mentioned, we go right to our earnings. We always check out to see, does management have control of what's going on? Are they guiding the street to a beatable number? And they are here. 89, 36, 25, and the most recent one was a really solid 77%. So 57% positive surprise. So they're beating the number handily. So what has happened to estimates? Well, this quarter, and we love to see this flip from negative to positive, the 15-cent move. I'm going to make that a little bit thicker so you can see it. Thicker. There we go. Next quarter, 74 to 86 cents. The full year, 280 to 238. That's a nice move. 356 to 404. Don't let that 404 confuse you with the website not found style number, but it's a big thing. I like it. And let's take a look at the growth that we're expecting. This year's 2013 is over. Or no, I guess it isn't. This is 2013. They've already reported the fourth quarter. So 15% growth this year, 15, nice and steady on the top line growth. But as I recall right from that earnings, it was all about bookings, and they had a lot of bookings, and they had strength in that. So I'd say a lot of growth coming for Airbnb. So what are you paying for it? You're paying 37.7 times forward earnings, 24% top line growth in the most recent quarter. Big price to book, because this is the digital asset. You own the house or the apartment or the whatever, and you rent it out. So you expect the big numbers for sales and for that. So that's okay. Here's the story, though. We got margins going 17% to 20% to 22.5. You get margin growth like that, and you get revenue growth like this, and you're going to see earnings go woo that way. That's my professional take on that. I got to get more professional, I guess. All right, so let's take a look at the chart. Airbnb, a darling of the past, has come down and is now turning on that margin machine. So, I honest to God, I like this stock to go to 180 and test the 200 level. I'd like to be a seller 200, but I think we're going to get to 180. And I think you got a lot of room in there. So that's one to keep on your radar screen. That's Airbnb, ABNB. All right. Let's go to the next one. The next one is Pegasystems. Pega, P-E-G, Pegasystems, and P-E-G-A. That's your ticker. It's a Zacks rank number one strong buy, and it too has got the growth divergence, which I mumbled through before. Pegasystems is that CRM, customer relationship management, and we can see another name that had posted a beat, shot up, come back just a little bit. We're not seeing quite as a dramatic pullback for Pega, but pullback nonetheless. So here we've got slightly different story. Earnings, a gigantic beat here, a gigantic miss here, big miss, gigantic beat again. So we've averaged out to just a nice little beat. But this just tells you how off the analysts are, or maybe it's management that just doesn't communicate a really good number. But you don't want to see these beats and or misses be that absurd, because then it's either a whole sandbag thing and then you can't trust them, or they don't know their business and you can't trust them. All right, 69 to 45 and then back down to 40. So that's a little up and up and down. Next quarter, we're going up and down again. We go loss of 3 to 8 to 1 to 18, but on the trend overall up $62 to $1.31. Boy, that feels like more than a double there. And then next year, where there's little to no visibility at this point, it's $1.12 to $1.87. Good for them. Let's take a sneak peek of that growth. And we can see there isn't that much growth for this year, just 6%, and picking it up next year for 10%. So what is the story here, Brian? You might be saying to yourself, at 36 times earnings and 25% top line growth, some similar numbers to Airbnb, but a gigantic price to book here at 30 times and a price to sales of 3. So the idea here is that, again, very asset slim for a software play like this. So that's why we're going to have a gigantic price to book, no assets. Price to sales is pretty small. I could see that number getting much higher. So your margins are negative, and they're going to get better. They're going to get to zero. They're going to get better, right? I mean, that's why they're in business. They're not in business to lose money. They're in business to make money. That's why they do it. I have faith in them. I have faith that they're going to do it. And once that happens, they're going to have a gigantic turnaround. And you can see that this stock was really, this is the pandemic, and then, running it up and then really taking it on the chin here. That's just a big time move from 120 area more, really 140 down to 40, $100 a share. And now we get that beat to kind of wake us back up, and our numbers are telling us that this thing can get back up here. So I think within a quarter or so, if we get one more quarter of good numbers out of Pega, P-E-G-A, then we should be good to go. I think that's definitely a good reason to keep Pega and Airbnb on your radar screen. Well, that was a lot of fun. Be sure to join us next time when we take a look at 2 more stocks for your aggressive growth radar screen. And why don't you take the time to go over to Zacks.com/promo to check out all of our latest promotions.